by the way, it is Tuesday, March 12th in the evening. Hope you all had a good day. Let's look at meta. And so I want to have this conversation about the different time frames. Many people trade on the 1 minute. I like to trade the 2 and the 5, or at least look at the 5 for confirmation, because I think trading at the 5, you will, as you'll see here with a couple examples, perhaps not get the very best entry on the break, but you get, I think, more confirmation, more confidence in the trade, slows things down a little bit. You're less erratic in your trading, and you won't get faked out as often. You might not have the best entries on trades that work immediately when they break key levels, but you also won't have a lot of as many fake outs. You'll still have fake outs. Here's an example, meta. Let's start at the 1 minute and work our way up. Meta, 1 minute, trade up to the pre-market high. We end up closing on a 1 minute candle above it. This candle closes right at it, slightly above it. Same here. Some people might have taken this trade thinking, all right, we're going to get some volume. We're going to get a push up to the prior day high, and never had it. Had a strong rejection candle here, so this would have definitely stopped you out, and you would have stopped out over here too. If you're only trading on the 1 minute candle and you're completely ignoring the higher time frames. But realistically, if you had attempted it here and failed and here and failed, I don't know. Are you really going to try a third time? Probably not. And so that's the frustrating thing about trading on the 1 minute. You try it, it fails. You try it, and you fail. You say, all right, I'm done with this thing. And then the third time's a charm, and it goes without you. Now, if you just not waited, but if you had been trading off of the 5 minute, or at least used the 5 minute for confirmation, you'd avoid it. There's a no trade zone. At no point does any 5 minute trading candle close above the pre-market high until right here at 9:20, and we have clean action. And so this would have been your first and only trade on the 5 minute. So this is definitely an example of trading on the 5 minute, or at least referencing the 5 minute before getting into the trade, would have avoided 2 stop outs and a successful, profitable trade for you. Let's go to Amazon. So that's the entry side. It also can help you on the exit side, where you don't get faked out on the exit. You can stay in the trade a little bit longer, whether you're playing stock, whether you're playing options, and capture more upside. So here on the 5 minute, you see clean price action where we break 905 on Amazon. Have another movement, a nice movement. So 2 consecutive green candles, slight pullback, a third green candle stronger than the prior 2, and some continuation. 3 consecutive 5 minute green candles, 1 slight pullback, and then another green candle on the upside. We end up trading up to 176.76. At no point do we close below or wick below the pre-market range. At no point do we close below or wick below the prior day range once we've broken through it, and at no point do we close below or wick below the 9 EMA until the trade becomes invalidated here. Not that you'd have held this whole time and not taken profits at some point, but certainly this right here could have been a place to take profits when this 5 minute candle closes below the low of this green candle. So this is likely where I was not in this trade, but where I would have taken profits, or at least most of the profits. But here certainly at the very latest. All right, now let's look at Amazon on the 1 day, 1 minute. Trading within pre-market range, we end up having support here at the pre-market low. We take out the 9 EMA, 20 SMA, end up reclaiming VWAP, or VWAP, and then breaking the pre-market high. But right here, you can see at 9:17, we end up closing below the 9 EMA. So this would have been your profit. It would have been a positive trade, but you would have missed out on the second leg, the second half of the movement, or second 2/3 of the movement. And if we go to 9:17 on the 5 minute, you can see that we don't have that premature exit the way that we did on the 1 minute. What else do you want to look at? Let's say Microsoft. Microsoft is one that I didn't day trade today, but I have been holding it for several days in a swing trade. This is the first 5 minute break. Yeah, here's an example where if you'd taken the trade at the open, you would have stopped out here, versus if you'd waited for this candle to settle, it ends up closing here, and you get a pullback to the pre-market high. If you want to enter, could have entered with a very sound setup here on the 850 candle, green candle, with strong continuation up here. Likely would have exited here If you're playing really conservatively, when we end up taking out the low of this prior 5-minute candle here, but certainly right here would have been your other point. Here's an example where actually having that really tight stop where you wick below or close below, well, it's pretty much at, but certainly wick below the prior. Right, that's very conservative, where you're taking yourself out when you just wick below. But on a 5 basis, after you're already in the money this much, you get no argument for me on taking your money right here, taking your money and running. And that actually would have been more advantageous than waiting for the structural break defined by, it means defined in different ways, but certainly defined by the closing of a 5-minute candle below the moving average, the 9-period moving average. Either. So here's a 3-for-3 case of where the 5-minute really would have served you well, would have served you better than simply trading and only analyzing on the 1 minute. So I think in every situation, every stock, every day, to be ignoring the higher time frames and just only focused on the 1 minute. Have you faked out more often than not, and also have you exiting profitable trades prematurely. So the 5-minute should be on your screen. I think a split screen with the 1 minute, 5-minute, or 2 minute, 5-minute. I really like the 2 minute. And the 5-minute is a good way to go. You also certainly want to look at the daily. You want to pull yourself out to even higher time frames. That should be part of your preparation, understanding when you look left, where are those areas of support and resistance. You always want to be mindful of those, but in terms of actually then trading the option or the underlying, I think the 5-minute, 2-minute combination is the way to go. It's not the only way to go. It's not. I'm not saying it's the right way to do it. I'm just giving you a few examples from today, from March 12th, where the 1 minute alone and being agnostic of everything else would not have served your trading well. And either would have had you taking a loss on the day, getting stopped out a couple times, revenge trading, or walking away and missing out on the opportunities that did present themselves. So I always like to have teaching moments where they are beyond just theoretical or hypothetical. I want to give real examples. And there's a lot of talk about the 4-hour and the 15-minute and the 60-minute and the 60-minute orb and the 5-minute and 10-minute and 30-minute orb. And so how you define what the range is and when the range breaks is a matter of preference. There's a lot of traders that do well in a 60-minute time frame in terms of how you're defining the range. Some look at the 5-minute, some look at the 15-minute. But regardless, when you're actually transacting, when you're hitting that buy and sell button, you want to be looking at multiple time frames at the 2-minute and the 5-minute. So that's just if you're so focused on the 1 minute, again, and I think you're probably doing yourself a bit of a disservice. So we'll see what Supermicro does. I will never trade the options on this. I only like trading the options currently. It is March 12th. Maybe this will change next week. Probably not next week, but maybe a month or two from now. NVIDIA, Meta, AMD, Microsoft, Amazon, and then the SPY. I'll certainly look at coin. I'll certainly look at Supermicro. There are other stocks that have volatility that are in the tech space or the AI space. ARM is another one, but I've just, at least so far this year, have been just trading the stock itself, the equity itself, and only trading options on those that the spreads aren't going to kill me and I'm not going to get insane slippage. Although, NVIDIA is very expensive. Those premiums are very, very expensive, and they're extremely volatile. So not to say that NVIDIA is easy to trade in the options either, but they do give you a lot of potential and they move very quickly. And so therefore, I think it'd be foolish to only trade the underlying in NVIDIA, because we see these strong movements and we see strong continuation. I mean, not every day. We had an example last week where it wasn't the case, but I mean, here's a day today, just to bring up the chart one more time, of once we had this range break, and then, I mean, this is very clean. And these are some big moves. We go from 882 up to 904. I mean, not as big of a range as we saw, in the most extreme cases last week. But this is, for your average Tuesday, it seems like an average Tuesday to me. I mean, this is a nice setup and a nice trade. So, I hold the equity in a long-term account, and I'll trade the options on this every single day if the opportunity presents itself. With that, it was a good day. A little tired, but hope you all are well. And we'll talk to you soon. Bye.